ladies and gentlemen. I am Vivek Mehta, and you're listening to Bit Talks Season 2. Bit Talks is your go to podcast for Web3, where blockchain meets imagination. After the enormous success of our Season 1, we are back with Season 2. In Season 1, you saw a lot of industry professionals, co founders, entrepreneurs coming and joining us, sharing their thoughts, their ideas about blockchain space, Web3 space, investing in this space, and a lot of different ideas across different verticals. Seeing that, we thought of coming up with a second season, which would be packed with more insightful discussions, more dynamic individuals sharing their ideas, their thoughts, their their ideologies about the overall industry growth, and what makes Web3 so different that everybody wants to get their hands on. To talk more about this today, we have Tushar Kansal. But before we start, let me introduce myself. I'm Vivek Mehta, the fund manager at Leo Ventures. Leo Ventures is a Singapore based venture capital firm that invests in early stage Web 2 and Web 3 projects. We are a small compact team that is pretty much sector agnostic and focuses on investing in APAC, Dubai MENA region, and Southeast Asia regions. And off to Tushar to talk about him. Tushar is our one of very close friends and one of our partners. He's a founder and CEO of Consultancy Ventures. He's an accomplished professional, a thought leader, and a thought influencer. Over the years, Tushar has supported startups and growth stage companies in diverse sectors across the blockchain and crypto space globally. Tushar is a venture advisor with a Canadian VC fund and has invested in over 350 plus startups till date in across 60 countries. His expert opinion is often sought by leading business news channels and publications. Tushar has successfully delivered over 300 plus talks across various social channels over his course of time. He's connected with 450 plus investors globally, picking up global deals while being sector agnostic. To know more about him, let's talk to him. Tushar, welcome to Bit Talks Season 2, Episode 1. Off to you.
Thank you, Vivek. Thank you so much for having me on your podcast.
Sure.
And my best wishes to your fund as well. I have more than 20 years of journey in the investing space, and I love bringing it, sharing ideas, exchanging thoughts, and also contributing by this way by reaching out to startup founders, by reaching out to investors, and help in whichever way possible. So that is, more than 20 years of journey, and thank you for giving an introduction about me as well.
Anytime, my pleasure, my pleasure. So, Tushar, before we start, can you just give us a brief intro about Consultancy Ventures and what do you guys do over there? And tell us more about your investments in the past and what makes Consultancy Ventures different from others.
Well, Consultancy Ventures is a network of around 450 venture capital funds, family offices, and angel networks.
Mhm,
We have built this network over the last 9 years,
mhm,
and this includes all the active investors, institutional investors from India,
mhm,
as also many from Singapore, Dubai, US, and UK. And over these years, we would have helped over $100 million worth of investments across a number of startups and growth stage companies.
nice.
And as advisor with the Canadian Venture Capital Fund as well, we have
Mhm,
invested in 350 companies across 60 countries.
mhm.
And personally, I have invested in 8 companies at different stages.
Amazing, amazing. That's very fascinating.
Thank you.
So, moving off, I have a question for you. As a large part of our audience is students and wannabe startup founders, you see, I mean, everybody wants to start up something today. So, what are your life learnings in the form of pointers for their benefit? I mean, what is that thing that you would like to share with the upcoming generation of founders and entrepreneurs so that they don't make the mistakes?
Well, in these more than 2 decades, I have been part of Deloitte and Touche, which was a Big Four firm, and then I was part of the VC fund of Times of India, India's largest media house,
Yeah.
and I was also the CFO of an investee company of the $295 billion Guggenheim Partners. So I understand all these aspects not only from the startup side but also from the investor side. And I feel that there are some personality traits and some skills which one must acquire to make a successful founder.
True.
For example, genuine innovators who innovate genuinely, they are open to starting anew, constantly exploring different paths towards their goals. So you have to change the business plan, pivot to a new business plan. If your mind is not open, then you won't be able to take the journey again and again. Actually, the fear of discomfort that
Yeah.
comes with redoing things in a different way, it signifies stagnation rather than progress. It's a sign of aging and
True.
not a sign of moving forward.
True. True. True.
Inspiration, Vivek, is fleeting. You have to act on your motivation promptly. Delaying action increases the likelihood of losing that motivation over time.
Agree.
So with that burst of inspiration, be you have to take action. And when you take action, always remember, be impatient in your actions but patient with the results.
Wow.
You have to act swiftly but be flexible and understanding also
Basically, be
that.
agile. Yeah. Be agile.
Yeah, agile, yeah, but results may take time to materialize.
True. True.
So all this way, you have to enjoy the journey, you have to listen, absorb, and learn from others, but forge your own path. No
Wow.
one can outdo you at being yourself.
Very well said.
So these are the traits which I feel that a successful founder should have. If a person wants to be a successful professional as well, apart from being a founder, then he has to identify the people, businesses, and projects that uniquely require your specific skills. That is your exclusive contribution. Like, a person is very good in organizing teams and getting a task executed. So he has to identify those projects which need this kind of a person,
True.
and you have to engage in activities that feel like play to you but appear as work to others. This
Wow.
mindset can transform enjoyable endeavors into monetizable pursuits.
Yes.
I
Yes.
read somewhere that if you make all your tasks joyful, you won't have to work even 1 minute in your life.
True. 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 I
And
think because that was something similarly said by Steve Jobs. If you love your
yeah,
work, yeah, if you love your work, you won't have to work a single day in your life.
single day in your life.
True. True.
Absolutely. And
Very well.
your work, let your work be everyone else's vocation while it remains a passion for you. So your
Definitely.
commitment makes you unbeatable when work becomes your calling.
Definitely. Definitely.
And in this journey, I have seen sometimes founders overdo this journey also, because sometimes what happens is they get a call at 9 p.m. They feel it is my business, my money, I have to pick this call. And sometimes that discipline goes away, so it results in a burnout as well. So uh, you have to keep it as your passion, but you have to be very disciplined about how you are doing it. And
Exactly.
then, as I said, you have to enjoy the journey. A happy person desires many things, while a sick person seeks only one. So endless desires can cloud your peace. Simplicity is the key.
Very.
So you can't be full of ticking your desires all the time. You have to it leads to suffering. Buddha has said that the root of suffering is desires. The more you
Wow.
want, the less likely you are likely to attain your desires.
Very well said.
And cultivating a habit of reading 1 hour a day places you amongst the top 0.001%. So, all the successful fund guys, all the successful founders, one trait which you'll find very common in them is they read a lot. And it is not about reading all the time. It is about maybe devoting an hour every day,
Exactly.
or
Consistently. Yeah.
yeah, and consistently showing up and engaging with material that excites your thoughts is essential. That
Yeah.
this thing excites me. I want to go deep into it.
Mm-hmm.
And what happens is, if you read a lot, and if your mind is too full, then you write a lot, then you'll have a clear mind which will enhance your judgment, and it will result in better outcomes.
Very well said.
And to live in harmony with reality, you have to gain a deep understanding of what you do and why you do it. Sometimes, a lot of startup founders say that, I don't know why, but I just like to be at this problem. I just want to do something about it. And if they try and go deeper into their motivations, it'll
Mm.
be it'll be a very happy process for them.
Mm.
And once you are moving ahead in your startup journey, you have to grasp the fundamentals of life, including arithmetic, philosophy, basic logic, and simple similar concepts. So wealth is not generated solely by trading time for money.
Mm.
Nowadays, we are living in times of multiplier effect. If you know
Mm.
coding, you can do 10 times more than what time you are giving to it.
Mm.
If you know a particular skill, there is a multiplier effect. So
Yeah.
your personal brand, your intellectual property, your societal value, they are indispensable, and they are
Yeah.
irreplaceable.
Irreplaceable. Yes. True.
Yeah. And
Well,
always, yeah.
yeah, yeah, yeah. Sorry to cut you off, Tushar. But let's. I mean, that brought me to another question. Since you mentioned, I wanted to ask, what is the breakup of tech versus non-tech investments globally and in India? And if you could help us put some light on that from your experience in the past and some investments that you have made.
Well, global tech VC investments was around 675 billion last year,
Mm-hmm.
and it doubled from the previous year before that.
Mm.
And it was led by US and China. And
Wow.
there was a decline in VC investment last year, almost
Yeah.
a 35% decline.
Yes.
In India, the investment was 15 billion, and it increased to 45 billion last year.
Mm-hmm.
And India accounts for around 5% of the global VC funding currently.
Mm-hmm. Yeah.
And
Yeah.
the total deal value has also seen a compression.
True.
But deal volume has seen an increase. The ticket sizes have gone down,
Yeah.
and the total number of deals have seen an increase.
True.
And tech versus non-tech, if you try to classify, then almost 60% of investments are tech, and
Mm.
40% are non-tech. And the primary reason why non-tech is coming as high as 40% is because the non-tech investments are larger ticket sizes, private equity size.
Yeah, 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 yeah.
These are
True.
large projects, basically. So, because technology starts from a small scale, and because it's a disruption strategy, so not many companies make it big.
Big.
So that's why it's a 60 to 40%.
I see. I see. Very interesting insights, Tushar. I mean, that's pretty true. Last year we witnessed a sort of a funding winter where a lot of startups struggled to meet their target fundraise because of a lot of VCs not putting into their money and being
Right,
skeptical about the markets. There was
right,
also a lot of FUD going around, the mass layoffs, then expecting the next market crash down or something similarly happening in the global markets, and that's why even the traditional markets or the regional markets got affected due to that. But hopefully
absolutely.
this year started with a bang, and we hope that the funding. I mean, already it has pretty much resumed and moving towards the earlier cycles. But we pretty much hope that this run, the next bull run, call it whatsoever, or even the current funding cycle, will see huge or higher numbers than that of the previous rally.
It will,
And
it will. I mean, also because the IPO market in India has opened up for these companies.
hmm,
So, a lot of investors whose money was blocked in these unicorns, it is getting released from the IPOs. So, they become reinvestors. So, they invest
true.
again. So, there is a trickle down effect as well.
Exactly, exactly. So I mean, pretty much I feel once it's a top down funnel where once investors start showing trust into. I mean, once the FIIs, like the foreign institutional investors, start showing trust into the regional markets, they start pouring in money. once money starts coming into the tech in India, for example, the regional markets, startups take up the pace. They gear up for funding. VC start funding them, and then it goes down towards employment, and then the
Yeah,
household, and then the banks, and this is a cycle.
correct.
So I hope this will be even stronger this time.
It will
Well,
be. Yeah.
moving on to our next question. From your funding perspective globally, I mean, of all the projects that you have funded till date, and specifically in India, can you please share some figures and thoughts on some sectors like AI, environment? Environment tech is one of the growing sectors that we have seen in the past decade and even in the current years. Then consumer tech, health tech, agri tech again combined with environment, ESG, and D2C markets. Any uh, any figures and thoughts on what do you think about these
Yeah,
sectors?
I mean, AI is going exponential. I mean, the global funding in AI doubled to $67 billion, which was, almost 65 AI unicorns, which
Wow.
is up 450% from the last year.
Damn.
And market
That's
size is likely to expand at a CAGR of 37% till 2030.
Mhm.
Of course, led by, you saw OpenAI's valuation being $86 billion in the current round. And AI is expected to contribute almost $15 trillion to the global economy by 2030, more
Mhm.
than the output of China and India combined.
Oh.
And in India, you saw Krutim of
Krutrin. Yeah.
Bhavini.
Bhavish Agrawal,
Yeah,
yeah.
it became a unicorn in 9 months.
9 months.
So that is, because in reality, if you look at the ground situation, Chat GPT is replacing jobs,
Mm.
content jobs, copywriter jobs, clerk jobs. So this changes, and then those companies, those countries, and companies who don't keep up with the trend, their productivity will decrease, and they won't be able to compete with the other companies who are using AI.
Well
And
said.
yeah, and even China, this 26% rise in AI investments, and in India right now, the AI investments are close to $12.5 billion, which is likely to grow to $71 billion by
Mhm.
2027.
Wow.
And we have invested in Animoy Technologies, which is using AI with a combination of robotics.
Hmm.
And India was actually, ranked eighth in the top 10 countries by AI journals. So
Wow.
so we are quite good there. As coming to the environment, there are targets given to each country under the Paris Accord, and
Hmm.
all the countries are signatories to the Paris Accord, including India.
Hmm.
Now, the good part is that India ranks amongst the top 10 countries who are actually meeting the targets. And right now, our solar and wind is more than 100 gigawatts. If you look at the total targets achieved by these Paris Accord countries, then only 20% of the targets are on track to be achieved by 2030. But India is leading there.
Wow.
And
Wow.
the global environment investment was $13.7 billion. It is likely to increase to at a CAGR of almost 21% by 2030, till 2030. And
Wow.
this is, of course, led by the Paris Accord, because all the countries have targets to become carbon neutral across the carbon intensive industries. And you would have seen that Reliance is investing huge amount of money in their giga complex to manufacture green hydrogen, to produce green hydrogen at a rate of $1 per kg, which is 20% of the current rate in the market of $5 per kg.
Hmm.
So of course, all that investment going in, it seeps into other companies. Reliance has been buying environment companies, as an example. What Facebook and Google do with tech companies in the US,
Yes.
we have seen
Reliance.
Reliance do in India.
Yes. Reliance doing in India and doing pretty much in every sector, I would say.
In every sector, I mean, all that money percolates down and creates a ripple effect.
Yes.
And green tech exports from developing countries have risen to $75 billion from 57 billion between 2018 and last year.
Yes.
and the share of global market of developing nations is around 33%. So
Wow.
this is about environment and consumer market. Uh, India's primary contribution to GDP comes from consumption, and
Mhm.
the worldwide market for consumer tech is huge, around $4 trillion. And
Mhm.
the CAGR in India is around 15%. The
Mhm.
global consumer tech space has created almost $250 billion in valuation and over 40 unicorns by last year.
Wow.
Pandemic accelerated this trend because a lot of consumers moved online. They started understanding the internet, and fortunately, Geo had got launched in India by then with cheap data prices. So that's why the adoption of consumer technology, including D2C, including e-commerce, it surged, and the use of Siri and Alexa, they
Yeah.
also increased.
True.
So
True.
that is the case. And if you heard like Sachin Bansal, who founded
Hmm. Flipkart.
Flipkart, he
Yeah.
had a non-compete clause with Flipkart, with
Yes.
Walmart. And now that time duration of that non-compete is over, so he has launched a new e-commerce company. So
Yeah.
this shows that the confidence of an existing successful founder in e-commerce.
Yeah.
And
Pretty much in D2C as well.
in D2C as well. I mean, imagine uh, Mama's Earth, Mama Earth,
Mama.
having a profit of I think 15 crores or 20 crores,
Yeah.
uh, with a valuation in the IPO valuation of 10,000 crore.
10,000 crores. Yeah. That their IPO valuation made news all over the world. I remember right after the
I
first
mean,
season.
if you compare it with the revenue, then still, the number is somewhere justifiable. But on
Yes.
a such a low profit, getting a 10,000 crore shows that the investor is ready to keep on pumping money in this business.
True. True. True.
And if I recently there was a D2C Insider Summit in Delhi, and I went there, and I think I would have spoken with almost 50 D2C companies, and all of them had got started after Mama Earth.
Really, that's true.
Yeah, all of
Also,
them.
I observed this one thing. I mean, in the recent pitches as well, there are so many, companies who are coming up into the D2C sector, particularly into the consumer tech, like cosmetics or any sort of household appliances, anything where it is directly to the customer, and their profits, their revenues are staggering right from the website without utilizing any third party platform. Take Flipkart, for example, or Amazon. If they are into food, take like Geomart or anything, or Zomato, Swiggy. Without relying on these platforms, they are making like crazy revenues, and even
Yeah,
taking successful fundings on that.
yeah, absolutely. I mean, one of our clients had a healthy snacking branding company in D2C space, and that company didn't do well. So he shut it down because he thought that, in the healthy snacking space, creating a high margin brand as of now was a slow process. And
Hmm.
now he has launched a consumer brand in D2C. In
Okay.
the fourth month, on
Hmm.
a spend of 2.5 lakh per month, rupees per month on performance marketing, he's doing a turnover of 25 lakhs, 10 times performance marketing.
Damn.
And so he's already positive on unit economics.
Wow, wow, wow. I mean,
So
that
this
is
shows that,
I mean, this campaign's ROI is more than any performance marketing campaign even that anyone would run for a SaaS company, because usually you see SaaS companies have more ROI for performance marketing because of the cost of the production cost and everything. Here they are outperforming.
yeah, I mean, actually, I'm sure his digital marketing team is doing a great job because they are not spending mindlessly on Facebook and Insta and WhatsApp and Google.
True.
They are rather doing intelligent job with content marketing.
Hmm.
And in the performance marketing as well, they are doing regular A/B testing, and
Hmm.
then refining the keywords. And so I'm sure that if one knows the growth hacks, then
Hmm.
one can do an intelligent and cheap job in the D2C space.
Agree.
But matter of fact, Vivek, all these companies which I met in the D2C Insider Summit, many had no idea how to not burn so much of money
Hmm.
on the marketing side.
True, true. Very well said. A lot of startups go down under the high burn cycle where they're no matter what's the revenue they're making, they're making 1 lakhs, but at the same time they're burning down 2 to 3 lakhs, even at times 5 lakhs. That is 5 times the revenue. And
Right,
for
absolutely.
every investor putting onto the money with a into a startup which is having such a high burn cycle is a
Yeah,
sort
I
of a red
mean,
flag
it's
because
yeah, because doing a blind job is very easy. You put your credit card in Google and Facebook, and your revenue will go up, and then you will go to the investor that we have a high cash burn, and you fund us. That is the stupid man's way of running a D2C business. But if somebody is doing it intelligently, then that is where the success lies.
exactly, exactly. No, these are really very the great insights that even I was not aware of.
Thank you.
But thanks for sharing that. Moving off
Thank you.
to our last question, Tushar, I would like to ask you what would be your 5 short messages for the startup community and those who look at India to take the leadership with its economy.
Oh, Vivek, these are messages. I mean, I can give you messages, but they are not all connected with each other.
Oh,
Like, I feel that it is high time we humans we see ourselves as a product of nature rather than the product of a digital world.
hmm,
So, sustainability is not an option. Look at what is happening with climate,
yeah,
and it is an imperative.
hmm, hmm,
And with the advent of so many screens all around us, laptop, iPad, mobile, digital detox, industry 5.0 will be about digital detox, nature travels, earth preservation, plant-based foods, a balanced lifestyle, and giving much needed breathing space to Mother Earth.
hmm, 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 hmm.
And another issue I'm very passionate about is that India ranks 163rd out of 175 countries in contract enforcement because of the bad state of our judicial system.
Yes, yes.
So, if I feel that a lot of people are putting clauses like arbitration in Singapore and London,
Hmm,
and if India improves the contract enforcement score, then that will probably give a huge fillip to our GDP growth.
hmm, hmm, hmm.
And one last thing which I am very passionate about is the economic side. That the rupee, the Indian national rupee, the value of the rupee should be higher. It is very low all the time,
Hmm, hmm.
and it is a shame for the third biggest economy in purchasing power parity terms. We are a $12 trillion economy in PPP terms,
Yeah.
and an economy which has only 63% debt to GDP
Hmm.
ratio as compared to 250% for China.
No.
To not allow a strong rupee,
Hmm.
because if we don't have a strong rupee, as soon as a person becomes well off, he leaves India along with his wealth,
Very good.
because he wants to live in a country which has a strong currency.
Yes, yes. So
And
that is also one of the
even the rich,
reasons that we are not seeing more wealthy individuals coming up lately
yeah, because they want to keep their asset ownership and the money outside India, because the rupee depreciates all the
all the
time.
time. Yes, yes.
And the biggest reason why rupee depreciates all the time is that the IT companies put pressure on the government to keep the rupee low,
Low
because all they are doing body shopping.
body shopping. Yes.
So they are just making margins by capturing the differential in the currency.
Yes, yes. They arbitrage basically.
They arbitrage, right? So I mean, I feel that if India gives focus on the value of the rupee, and we are best positioned because we are already a $12 trillion economy on PPP terms.
Yeah.
So we are the third largest already. So we just have to ensure that the economy is managed in such a way. We have trade surpluses. we have less budget deficits, then of course a lot can be done by the RBI also to not let the rupee become so cheap.
Hmm.
So these three things I feel, Vivek, that very passionate about these
Very
things.
well said. Very well said. Thank you so much for
Thank
your
you.
insights, Tushar. These were really some of the things that needed to be shared out there in the community and the public. So thank you so much for your insights. Uh, Moving off, I mean that's all for today from my end. If there are any last questions, any last thoughts you would like to share, going ahead.
No, I would like to share that that you are doing a lot of good work in the pioneering space with your fund being focused on
Yes.
the new age technologies, and my best wishes are always there, and looking forward to doing a lot of work with you in the future.
Likewise, likewise, Tushar.
And thank you for having me.
Yeah, always, always. We would love to invite you over and over. So thank you for that.
Thank you.
So
Thanks. Thank
thank
you.
you, ladies and gentlemen. This was Tushar Kansal from Consultancy Ventures with us today, and we'll be back with another episode of Bit Talks very soon. Thank you so much, and stay tuned. Thank you, Tushar. See you in the next one.
Thank you. Thank you.